The ROI is incredible. One deal out of that, you make hundreds of thousands, maybe more than that. You don't want to go to where all the rookies are. You're not going to learn anything.
So in today's episode, ladies, we have Stephanie Boldrini. She is from California and got her start as an angel investor and quickly realized that she wanted to invest in commercial real estate for better returns.
Well, her journey took some turns. She invested in car wash and did not go well. And she shares why. It's important to really understand what went wrong and lessons learned. And then she's now investing into self-storage. And we dissect that. What's working, what's not working, where is she moving in the future? And she did one thing that it really propelled her to take her business to the next level. And I'm not going to share that with you now. You need to listen to our episode and really understand where did she put herself into in order to get that.
Welcome back, everyone. This is Liz.
And this is Andressa.
Welcome back to the Real Estate Investor Show. Our mission, our passion, what keeps us going day in and day out is to empower women to live a financially free and balanced life. We take that seriously, and we're so excited to have each week amazing women, whether it's investing, business, or self-care, our three pillars, come on and talk about their strategies and things you can't Google either, right? Things you're going to get from our podcast and from the conversation. So Stephanie, thank you so much for being on our show. We appreciate your time. Excited to jump into your story and how your path led you to self-storage and car washes and all the stuff we're going to talk about today. So thank you for being here.
Thank you so much for having me. Really appreciate it.
So first question for you, Stephanie, what lesson has taken you the longest to learn on your journey of investing?
Ooh, that's a great question. Not the longest, I would say, but more the biggest mistake was to not do research on a certain asset class before investing in it. Just get excited about it, look at the numbers, say, oh, my skills are easily transferable. And it was not that easy.
I love that because, Liz and I have done so many tests and we're looking to do like a brain scan coming up. So stay tuned, people. Stay tuned. What we're going to find out. But one of the things that we did was a Kolbe test. And it talks about quick starters and folks that either do no research whatsoever, others that do a little research, others that do so many research that they don't do anything with it because they got so much there. So getting to know yourself, I think it's a beautiful thing. And you understand what works and doesn't work. And I love what you're saying, Stephanie, because I believe that we get so excited, right? Investors all around that are listening here, we get so excited because we saw this on Instagram, on TikTok, and oh my gosh, and I can totally rock that. So really understanding the pitfalls, I would love to really focus on how that can be like fuel for your growth and success from your journey. You started it as an angel investor, or you were active? Describe that for us, please.
I was working in tech sales at startups here in Silicon Valley. And at some point, you want to start investing, putting some of that money to work, and started doing some angel investing just as a matter of being here in the Bay Area. And very, very quickly, I was dating a guy that was a real estate investor at the time. It became very clear that real estate was a much, much better form of investing in many, many, many different levels, at least compared to angel investing, not venture capital. Capital is still difficult, but angel is even worse. The chances of you making it are very small. And until you get there, you're going to lose a lot. I met people that have been investing for 10 plus years with like Berkeley grads only, and they really run Berkeley grad startups. And I asked him, so are you on the positive or on the negative? And he said, on the negative. And I was like, what? I've been doing this for 10 years. So that's how I decided to start learning everything about real estate. And I'm very lucky that, I have learned about it, which is a fantastic asset class.
What were the parts about real estate that you're like, this is gonna be much better than me investing in these businesses that, like you're saying, took 10 years and they're still not.
Yeah.
What about real estate that quickly got you in, exploring? And I know you went into commercial, so I'd love to go there next. But and I know a lot of women listening are, investing or not yet. So why real estate for you, in particular?
Yeah. Well, over the last 100 years, 90% of all wealth created has been in real estate. Real estate goes up with inflation. So it's a fantastic form to protect your money. Your rent goes up, everything goes up. It's very hard to lose everything. And you have tax depreciation, tax benefits that you can take advantage of. And best of all, you can leverage your money with a loan. So if I invest $100,000 in a stock, I will get $100,000 of stock. If I invest $100,000 in real estate, I will get $500,000 of real estate. Now, if both go up 10%, I made $10K on my stock and I made $50K on my investment on real estate. That's a 50% increase on your money.
I love that. I love that way you said it, very quick. And it's very simple in that way, right?
Exactly.
Terms of the leverage part, which is the greatest part about real estate. So you started in commercial. Walk us through that path. There's a lot of different places that you can get involved in terms of real estate and different asset classes. So walk us through why commercial and what in commercial did you get involved in, and walk us through that a little bit. So I know self-storage and car washes were in particular a focus for you.
So my ex was in retail. So I started learning everything about retail first, all the leases and everything. And I was not sure where retail was going. And I know that if a huge tenant leaves, you're left with, a few years of potentially vacancy, and you need to do a lot of tenant improvement expenses and things like that. So I was a little bit scared of retail. So I learned on a podcast that self-storage was recession resistant and it does well in good times. So it's very solid on both economic times. And I said, that's the one I want to invest in, and ended up coming across this portfolio during the time that there were no deals. It was the beginning of my career, right? Just 4 or 5 years ago, and came across this portfolio of car washes and self-storage. And I said, how hard could it be, to transfer everything that I learned? The numbers make sense. The numbers are great. And it was not the case. It's a very difficult asset class. I didn't even bother asking anyone that owns a car wash what it feels like, what it is like. I didn't even bother going to a conference, which is one of the first things I tell people to do. Go to a conference, talk to people, meet people that can help you when you come across a problem, and learn as much as you can.
So let's break down the learnings, right? Nobody talks about it. Everybody goes on podcasts to share all the good stuff here. But I think that is really important for investors to really understand that you're a business owner, right? Mm-hmm. Above anything else, you're running a business. I see every single property as its own entity. If they are on their own entity or not, their own entity in my head, they need to stand on it in their own, not like take Peter to feed Paul. Take from Peter. What is it?
To pay Paul. You got it.
To pay Paul. I was like, take Peter's clothes to
Peter to go to Paul. Yeah.
Peter and Paul are naked. Oh gosh. Anyway, let's keep that. You got my point.
Bad visual.
But what I'm trying to say here is that I don't think a lot of investors look at their investments in real estate and in business as a business. As you were saying, okay, let me do my market research. Let's connect with other people that are already doing what they're doing so I can learn from them and skip. So let's talk about the pitfalls, right? We can start with a car wash because it's a shine object right now, which I am interested in learning more. Personally.
Literally yesterday's conversation, right?
Yeah. And I was like, we are talking about car wash more from a subscription model that I am interested in doing my research. And I know that my brain needs a lot of research, not extensive, but in order for me to be able to do that. But since you were here, let's talk about your experience within car wash. Share with us where you went wrong, and if you were to do it again, what would you have done differently?
I'm talking from an operator perspective, right? So if you want to hire a car wash manager and you have a huge organization, maybe that's the asset class for you. It has many benefits like huge depreciation. So what happened is that it has a lot of moving parts. Something breaks every single day. If you don't fix it right away, it's only going to pile up. You need a fantastic blue collar employees, and that's very hard to find. Very hard to find.
Is it very hard to find right now after the pandemic, or it's been hard to find before?
For me, it has always been hard to find. Maybe I'm not doing a proper job of, the interview questions, but they have a different life that we don't understand. It's different things happening in their families. They don't have work integrity sometimes. So it has been very difficult. So I did have a fantastic employee, and something happened to him, unfortunately, that he went to jail. And after that, things started to go down because I could not find a good employee. So in this particular city, I thought that we could just take out all the coin acceptance. But a lot of people there don't have credit or debit card, believe it or not. And so there are a lot of break-ins happening. You're dealing with cash collection. So even though you have the coin counter, you have other people collecting that for you. There is a lot of break-ins. You have to fix. It costs so much money to fix each break-in. It's not worth it from my perspective. My cash on cash that first year was, I believe, something around 55%. However, I did not have time to look at other properties. So I always tell people, what is important to you? Is time important to you? Is money important to you? Because these are all different things. Car wash, very time consuming, great cash on cash. Multifamily, I don't know what's happening. Multifamily right now, that's not my forte. Self-storage, definitely a lot less hands-on. It's a little tighter right now with the cap rates, but it's really what is your priority? What do you want to learn? How can you add value to self-storage and not? So,
do you think that if the car wash was located in a different market, right? It's like any real other type of real estate, right? It would really depend. I don't want to go to a war zone or see neighborhoods. Personally, I don't want to do that. Do you think that if it was on maybe, I'm assuming it was a C- neighborhood that it was located. If it was located somewhere else, is there a possibility that the issues could have been mitigated, or overall, no matter what the dynamic of the business, that's how it is?
The dynamic is not for me. So if you are able to always find fantastic people to work for you and maintain that car wash in top shape, which is a lot of work, great, by all means. But you're fully dependent on that person or people.
Does it depend on the size? Meaning, obviously, the 30 unit, I think in multifamily, right? If I have a 30 unit, the staffing for a 30 unit to fix issues, what have you, is different than a single family home, because usually they take care of all the expenses and the upkeep, or if there's something going on, unless it's something major. Curious, does car washes are they in the same vein? Meaning, are they kind of measured and managed by size? Or is it pretty, I've been to a bunch of car washes and they actually all look fairly similar. Some seem smaller and some seem larger. But is that also the way to think of car washes? Small, mid-size, large? And what size did you have? And does that impact amount of employees in that type of maintenance issues?
The ones that I have, they are self-serve. So they technically they should be simple.
Sure.
So you wash your own car. We don't have the tunnel. So
okay, gotcha.
I think tunnel will be even probably worse. And, where I live, I see these car washes, they have lines and lines and lines, but they have, I don't know, 30, 50 employees, right? So does one want to learn how to manage that? Then great. I really think it could be a fantastic asset class, especially over time, especially if you're building one from scratch in a good market. It depends on what is important to you, really. And if you want to focus on that asset class.
Yeah, I think for me, what is important as a customer and as an investor, what I'm looking for is scalability. Can I scale that? And what's going on with my customers, right? Mm-hmm. So like reverse engineer. I am the customer that I want to serve. So I don't want to wash my own car. And I also want to go quick and I want to go in and I don't want to get out of my car in either to pay to do anything. So I went for the first time on this car wash near here. It's a subscription model, meaning you join their membership, I guess. Mm-hmm. And if you use it, great. If you don't, you don't. But there was no people. No, zero, none, nobody ever. You open up, you put your card over there, you pay, open up the little thing there, you walk, you drive through, you get the hell out, and it's just, there's 2 lines. I was like, wait a minute, I really like this. Nobody, unless you want to do the, what is it called? Waxing thing. Like, don't worry about waxing anything.
I've never waxed a car in my entire life.
Yeah. I was like, who cares? I don't care. I gotta go. Right. So it was, for me, that is something that I'm really interested in learning. And I heard, ladies, and I know you guys are curious, right? I heard another day an interview, and I told Liz about this. The singer called Jason Derulo. He has 13 different types of stream income. And in this interview about business, somebody asked him, what is the number one right now model that is working for him? He mentioned about real estate, of course, right? It's on his portfolio. But one of the things he said, it's not glamorous, but it's the subscription model for different things, including car wash. So it's something I think that the more that we get the technology, right? We're talking technology right now, which we didn't have 10 years ago. With AI, who knows if we're going to have some voice activation and all of that. I think it's very interesting to as a business owner and you're on Silicon Valley, right? So you can really see different things, that startups that are happening there. Let's talk about self-storage. What attracted you? Of course, there's no tenants and toilets. So what else can an investor want?
Or trash, yeah.
Or trash.
Like all the teas.
What a dream about that. But from an investor perspective, what attracted you to this asset class?
The number one thing was that it was recession resistant, and it was around 2018, 2019 that I heard someone talk about it on a podcast, and we were overdue for a recession or a downturn. And I said, that's the one I want to focus on. Also, I don't like dealing with people regarding multifamily is not my forte. And I don't want people coming in 24/7, right? With self-storage, they come in on average twice a year to their unit. It's a garage door that you have to maintain. So it's a whole lot easier in many different levels. And I know that multifamily at the time, I don't know what's happening now, the cap rates were incredibly compressed.
Yeah.
And nothing made sense.
Yeah.
But we're seeing people return the keys to the bank, right? Like the one in Houston, 2,000 or 3,000 units. It's happening. So their loans are due. What are they going to do with a loan that is the interest rate that is twice as high? It's not possible when you bought it at 3.5%, 4% cap rate. The ease of maintenance, ease of not really needing a full-time employee on site, ability to add technology to it so people can rent. with their phones, scan a QR code, get in. We never get to meet our customers. So it's a lot easier from a brain cell usage perspective.
For introverts, it's perfect.
Yeah.
Don't like people, so it's perfect. But let's break down the pitfalls, right? What have you learned about self-storage that you wish you knew when you got started?
My facility did not have cameras, and we got some break-ins. The person was going through the roof from one unit to the other, so we didn't know that was happening. So it had affected quite a few units. So put cameras right away and find somebody to watch those cameras. I found somebody in another country where it's daytime when it's our night. So I feel better for these people watching, and they have been wonderful. It has been the biggest lesson.
That's smart, because then you have 24, literally somebody 24 hours. It's smart of the other guy too, to go from the top, right? Smart.
The value add aspect of any asset class is always where money is to be made, right? From multifamily to self-storage to fill in the blank. And the management of it is one element on how to obviously improve, optimize. The technology part is also critical. Women listening that are looking at self-storage, right? What do they want to look at? Okay, this is what the self-storage facility has now, probably like a mom and pop, same like multifamily. But this is what it can be. So what would be things that they want to look for where it's not being optimized? They're not using the correct technology. Is there sure ways? Because it's obvious with, if you see a lot of for rent ads at a multifamily, I know it seems obvious, something might be off. Because if you see a lot of for rent ads for rent ads.
For rent ads.
Yeah, for rent ads.
My
like signs. I'm sorry. What's that?
For a second. So, and yes, people, the accent kicks in our brain when we hear too. So what I heard is a single word that she said, for rent ad. I was like, I do not know that word. Learning something.
I meant to say, actually, thank you for calling me out though. I meant to say for rent signs. Is that when you see it for some weird reason, when we were actually, long story short, we had to find a 50 unit. The amount of for rent signs that this person had on their lawn was enormous. It was a crazy amount, meaning that was their strategy at finding new tenants. They were not using, they're not optimizing any sort of tech.
What are you talking about? Like they put a bunch?
Yeah. Like that was going to
each other?
Yeah. They put them everywhere on their location as their strategy for finding new tenants. The strategy, only strategy. Yeah. A few years ago. Yeah.
Mark Cook. Yeah.
Yeah. So my point, right? That's an opportunity. Like, whoa, this is your strategy. There's, let's welcome to 2023. My point though, is that what are those things for self-storage? What are those things that women could be looking for as they're looking at self-storage units? They're studying this asset class. What are those signs that be like, oh, this is an opportunity to optimize?
Yeah. So like any other asset class, can you increase rents or decrease costs? And can you build more? So you want to look at, of course, the properties nearby. How much are they charging? Are they fully occupied? Do they even have a website? Sure. So if they don't, it's fantastic. If the one you're buying doesn't have a website, fantastic. If they haven't raised rents for a long time, fantastic. So those are all the things that you want to look at. They're the major things that I always take a look at, besides, of course, after doing the market research, of course. So is it a good market, growing market, low poverty rate, diverse industry, and things like that?
In terms of I always curious to understand and hear people's opinions about the horizontal model or the vertical model, right?
Mm-hmm.
What are your thoughts on those?
In what way?
The horizontal is like when it's like flat. Maybe there's a name for it, right? It was like one next to the units
storage.
Yeah, the storage are flat. Do you invest more on those? Or there are those buildings that they've been converted into self-storage, but they are all skyline vertical.
Yeah.
Which ones do you invest more?
The one level, it's called drive up typically, because you can drive to your unit. The other ones, they're more they're a little fancier, I would say, where you would be building one yourself. If you buy those, they're typically owned by big REITs and they are already expensive. So you probably want to build those at some point in your career, which is what we're looking at doing here, hopefully. As a next step. But the typical one is a drive up one level.
One thing that I've seen also when I drive and I observe what's happening, I don't know if that was a shift after 2020 or not, but I think in 2020 a lot of people got RVs to get the hell out of their houses and go somewhere, right? And now the HOA doesn't allow you to park your RV in front of your house or whatever. So what I'm seeing a lot actually, is that those storage units also have places for people to park their RVs.
Yeah, it's a great market, definitely. So people will drive further.
So is this a way to kind of like, let's say I have a storage unit right now and I'm looking to maximize the potential of it. I look at it as like, okay, what's the best use of this land that I have besides the RVs? And I'm assuming this will be like an extra fee on top of the current rate is. We're renting a storage unit right now, so I'm all into all the fees, the add-ons, right? But besides the RV, is there any other add-on that could be added to the storage unit?
Sometimes you buy a facility that has non-climate controlled units only, so you can add on a climate controlled section. You can add some containers instead of building storage from scratch. RV is definitely a huge market right now. Some states, as you ladies know, are more difficult to get things approved than others. And sometimes the city fees it makes the project unfeasible regarding that kind of thing. So I would say those are the major things. There are all kinds of different storages that you can focus on, like food storage, right? But those are all different niches that exist and requires definitely a lot of research before building something like that.
I'm curious, you mentioned something a moment ago or a few minutes ago about the tighter returns. So while car washes, back to the car wash conversation, you said had a pretty decent cash on cash return.
Yeah.
But the experience of getting that just wasn't something you were interested in doing. Then you said something about really going all in and really growing your self-storage business, if you will, but it has tighter returns right now. So I'm curious to understand a little bit of that for you and also how you're navigating that. And then you also mentioned your building. So walk us through that thought process, because I think regardless of what asset class you're in, multifamily is a perfect example, that, those are all the questions that savvy investors are asking themselves right now. This is a little tighter. Do I do more here? Do I just stop that? Do I build? Where's the uniqueness here in this market where I can thrive basis of what's going on, right? That's the question most people are asking, regardless of what asset class. So I'm curious to hear your how you've navigated those pieces of the tighter returns and then building, because I think it could be transferable to most listening. Yeah.
So, as business owners, there will always be something happening to whatever industry, right? So right now, a lot of people are interested in self-storage and, you just got to find a way to find other deals, or you find something else within that asset class, like cold storage or wine storage or whatever, RV storage. So you just got to keep on pounding it, and getting your business going forever. It doesn't end. So I would say one of the things that really, really helped me take things to the next level is to join a mastermind. In my case, that it was particularly focused in self-storage, because I was able to find 2 partners there so far. And that really had an inflection point level to my business. I also had to present there. So I put my goals on a paper and I show them 1 billion to, self-storage in 10 years. So that means I need to build one from scratch every year at a minimum. So that's how I started talking to people to find land. And now we're getting a contract for land in California, which is, all part of the mastermind. But you also gotta do the work. You gotta follow up with people. You have to build relationships. It's a more than full-time job, as you ladies know.
Yeah, I think that one of the pitfalls is when we rely on our own experience and resources, right? And it's just as we grew as an immigrant from Brazil, and I know you're from Brazil too, I think that the tendency into like, okay, listen, we figure out how to live in another country, how to speak another language, how to fight in another language. Oh, we're good. We're good. We can do all of it, right? And I think that for everybody that starts investing in real estate, we're not challenging your capacity to make it happen, right? If you're investing in real estate and not choosing to, have a quote unquote secure job for the rest of your life, you have the grit to make it work no matter what. What we're saying here is that making the investment to be in a mastermind, surround yourself around people who are playing the same level. I'm not talking about you guys getting into like a networking event where you're the smartest person in the room and it's super comfortable. I'm sure for you to be in front of all other business owners and share your goals, the courage to do that, it's no joke. We're not talking about that, but that opened up so many doors, right? And how much is that worth? How much for you, Stephanie, was worth it to get one contact?
The ROI is incredible because you one deal out of that, right? You make whatever, hundreds of thousands, maybe more than that. And go to the expensive ones, I have to say.
Stuck. Yeah, but people get stuck on the initial investment.
Yeah, don't think about that because you don't want to go to where all the rookies are. You're not going to learn anything. And these people, they're unlikely to be in the business 3 years from now. There are a lot of people that get excited, right? Go to the rookie maybe to learn something, take a class.
Yeah.
But go to the expensive one. Those are where all the professionals are. I met so many people, and now I have a third partner actually from another expensive event that I went to.
Yeah, there's such truth in that, right? We get what we pay for. Mm-hmm. I know that because I sometimes used to buy cheap and fill in the blank, and it does matter, right? It does matter. Yeah. Then the things that I paid for, I'm like, I had that a long time. I paid more for that, So Stephanie, where can the ladies listening learn more about you and connect with you further?
I'm on LinkedIn. Just search my name, and my website is montecarlorei.com. I have a podcast in commercial real estate investing called Commercial Real Estate Investing from A to Z. We don't talk about residential or multifamily, but we talk about everything else.
Awesome. All this information you guys can find on our show notes. Now we're going to transition to our fabulous 3 questions. And the first one, Stephanie, is, what's the most transformational book you ever read?
I always read the Bible, but I'd say right now, 10X is easier than 2X. Fantastic, by the Who Not How guy.
I love that. Our first Investor Con, one of our speakers that worked for Dan, that was one of her presentations. And people were like, what is that? 10X is easier than 2X. And it's just like amazing to see what can happen. We're going to add here on the show notes the interview that we have with her, and you guys can check it out too. So, second question, what's the most transformational routine that you do to create a financially free and balanced life?
I always exercise at least 5 days a week, and I make a smoothie every morning of like 30 ingredients that I think is very, very healthy.
Love that. Last question. Which woman, famous or not, has inspired you the most?
My mom. She raised 3 children with very difficult circumstances and somehow brought us all here to this wonderful country. Very grateful.
Stephanie, thanks again so much for being on our show and sharing openly your path and all the things that are working and the things that you're like, I'm not doing that any longer. So we appreciate that so much. Thank you.
Thank you so much, ladies. Really appreciate it.
Thank you.